Hi everyone. So we got the unemployment data today and it was better than expected, but it turns out good news is bad news once again and markets sold off dramatically. I think they were probably going to do it anyway. We could not get above the 21 EMA in the previous session, but good jobs data ended up giving markets a sell, putting the next rate cut in jeopardy potentially. Maybe we see a pause at the next couple meetings. We knew we were going to get some pauses, but you can see the sell that we got today. Let's do a quick update on the charts as we head into the weekend. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. Quick look at fear and greed. Here you can see we stepped down to a 27 from a 32. No big surprises there. Market sold big. All of the major indicators are in extreme fear, and we're getting very close to it on the overall metric. Just keep in mind when we start to get into that extreme fear level, that is generally when we start to see markets bottom out. It gets as low as a 17. 17 to 20 is just about as low as it gets. You can see here previous dip was a 22, and then we got a bounce from there, and that 17 in here got a bounce from there. So just keep that in mind as we head into these lower levels. Volatility spiking makes sense. Safe haven demand, extreme fear, and junk bonds continuing to hover quite well actually. Moving over to the economic calendar, you can see hourly earnings a little bit lower than expectation. Non-farms way higher at 256,000, above that 164. Previous number was revised down slightly, but not a lot. Private non-farms also way better than expectations, and then we ended up getting the unemployment rate stepping down. My fear was that this was going to go up, and that was going to crater markets, but instead we got it better than expectation, and it also cratered markets, so who knows? I guess bad news is good, and good news is bad once again, or potentially the market was going to sell either way regardless of the data, so that's also a possibility, but in this case, good news was bad news for markets. And then looking at Max Pain, stock price right around 580, Max Pain 589, so well below the Max Pain numbers. Very bearish finish, well below all of the calls. So that is an indicator for me that markets are probably going to continue to sell here, especially if this put-call ratio continues to stay so low at a 1.17. And then quick look at the charts. You can see we gapped down and sold 1.5% right to the level. 579.78 was our next level if 585 sold. And you can see we closed just barely above it, and we're right on top of it now just by a few cents. So classic move, gap down to this level here, 585. We opened at 585.88, so I'm almost right on top of my level. Sold right to the next one. Pretty standard trading, actually, if you were in the markets today. Momentum back to bearish, as you would expect. RSI rejecting off the SMA. Again, we were talking about this here, the retest potential, and then we sold off dramatically from there. So this is still downtrending, at least in the short term. And then looking at it here on the hourly chart, sold off straight to the level. This was the trade in here. Got a little bit of a bounce here, so if you did buy the break back to the upside, there was a potential trade there. And then, of course, the resell from that 9 EMA on the hourly back down to the level was a potential trade. So couple of trades in there today. Markets were actually pretty consistent with what you would expect based on the indicators. And then similarly here on the Tasty charts, you can see we were in the middle of the range, sold right to the low of the range, caught a bounce, almost retested the middle, and then sold right back to that same area. So again, in line with what you would expect in a downtrend. Perfect sell here, hit the target. Did miss this lowest target at the end of the session, but probably just because we had that level. Not enough volume at the end of the week to push it through it again at the end of the session. Potentially looking for a little bit of a buy there just because we are so extended, but of course we want to be patient. You can trade off the level, but like I said, patience, everything looks bearish still. Moving over to the NASDAQ here, you got 1.5% down as well. Again, very similar setup. Gap down, didn't quite get to the level here, 509, but we pushed right through that level, almost hit my lowest level here at 503.50. Did come in line with these touches here, but did come up a little bit short there. Momentum bearish, RSI still bearish. Everything makes sense here. Falling a little bit more after hours. And then looking at that hourly chart, again, pretty much in line with what you would expect. Sold through the open, could have sold the break here at the level. Didn't quite hit the target on the short term, but if you had a trailing stop, you probably made some money in there. I actually traded the retest of the 509.7 level. You can see this 9 o'clock candle came in, touched it, and then sold some more from there. And then a little bit of rally, made some money there. Over through this trend where I got stopped out, but then caught a little bit of this move as we broke back below it. So overall, pretty good trading day, pretty much in line with expectations. Not as clean as the SPY charts, but you get a little bit more movement out of the NASDAQ, and it's also a little bit smaller product, which is why I like it. So overall, pretty good trading day, even though markets were down quite a bit. And then looking at the Tasty charts here, pulled right to that lowest ATR band. Makes sense why we didn't quite touch the level. Hit the band, bounced to there, almost the mid-range, and then sold off again. Did overthrow that 8 EMA, which is generally not what you would want to see. Probably a little bit why I got stopped out on that move, but then we broke right back below it, took the trade there, and everything worked out fine. So overall, again, pretty good trading day. Moving over to the Russell and the Dow, the Russell was down 2.2%, almost hit that 200 SMA at 214.88, right above my level there. I'm expecting a touch and then a bounce from there. You could argue maybe this is a bear flag now with the breakdown here today. Potentially, I'm still watching the 200. If the 200 holds, we're in good shape. If it breaks down, absolutely get out and watch out below. And then looking at the Dow, 1.6% down there. Surprisingly, the Dow fell pretty much in line with the other markets. The Dow's been holding up quite well on bearish days, but not so much today. The level is now 418.38 after breaking back below 426.20. We came right to it on the Wednesday session, gapped down and sold from it. So everything says this should go a little bit lower. Your next dynamic support would be the 144 down at 415.72. Moving over to Apple and Microsoft. Apple down 2.4%, closed below the level, looking for that 230 level next. And then similarly here, Microsoft breaking below the trend again, now looking for that 413.36 once again. This has been a super long grinding consolidation, but we're back below all the EMAs and SMAs. If we close below 413, I still think we're going to push into this 394 area, but I've been saying that for months at this point. Still hasn't happened, but I still think it's going to happen. Moving over to Tesla and NVIDIA. Tesla held up really well, 0.05 to the downside, holding up in this same trend that we've been talking about. Got to it here, got back above it the next day. So far, we've held it every single day. Couple of tests here over the last couple days. Big dips well below it, but then ended up closing above it. So Tesla, maybe that's a place to be in the short term. Really strong relative strength. NVIDIA, not so much, down 3%. Two big bear candles. Even though the Wednesday was flat on the day, we tried to gap higher and sold all of that back, and now we gapped much lower, back below all the EMAs and SMAs, looking for that 130.35 level once again. And then your dynamic support is now 128.50. Moving over to staples and discretionaries. Staples did exactly what we expected it to, down 1.3%, right to the trend line. So that trend continues to be important. Touched that level, caught a very small bounce. Is this the zone to be buying? You can see volume coming through on that candle. Again, I would be patient. If we start to see a little bit of a roll up in the next day or two, maybe this is a short-term oversold condition. The trend is obviously still very much bearish, but it's very oversold at a 23.74, not something you see often in the staples side. And then discretionary is down about 1%, actually holding up fairly well. Once this 55 EMA goes, I think that's going to accelerate to the downside, but for now, that is your support, 219.33. Moving over to Breadth. Breadth stepped down pretty dramatically here, momentum stepping back towards bearish. We still have the SMA as support on the RSIs on both of these, so we'll see if those end up holding up or not. But in the short term, momentum, bearish, step down, expecting a little bit lower move. We'll see if it holds a higher low on the 20-day. 50-day is at a new relative low close. Moving over to the dollar. The dollar went higher, makes sense with the strong economy. The dollar is going to find value with yields going higher on the back of that, especially now that it's less likely that we're going to see cuts. You can see the move here right to that next trend. Closed above the 109.50 level after testing it back here onto January. Continues to look very strong. If it breaks here, your next level is all the way up at 111 for me. I might have to relook this weekend and see if there's a level in here, probably somewhere in here, 110.4, somewhere in there maybe. Back on this consolidation, but we're back into this frame that we reached back in September of 22. This was a low point for markets, but markets have really just now started to go lower, so we'll see if the dollar is going to start to affect markets more. Honestly, I'm surprised that it hasn't done so more in the recent price action, but so far, markets have held up really well considering how strong this dollar has been really since back here in September. Moving over to the VIX. The VIX finally touched that 20 level. We expected it to touch it back here, but we ended up just now getting to it today, and now we're going to see if this pushes up into this next range, 22 to 23, somewhere in here in these trend lines. These are pretty long-term trend lines. You can see they mark some perfect bottoms back here, as well as some touches back here in August. And then you can see the candle open on that 19 December day, so that would give you a target in the 2250 to 2260 area. And then moving over to my accounts, I actually had the day off due to weather conditions today, so I did a bunch of day trading and that turned out extremely well. You can see my day trade counter, 21 day trades, on the day, and I did all of those in my individual account. I don't really day trade the IRA, but all of that was in the individual, and down on the day for the Qs, but managed to turn a profit on the day, $760. Really, really good trading. I was in sync with markets like I talked about. I talked about the trades I took, and I think nearly all of those were winners except for one. So overall, really, really good trading on the day for me. Obviously, the Roth was down. I didn't do any trading there except for taking off the shares, allowing the market to fall a little bit. So I managed to save myself a little money there. Only $3 loss versus $4.80 on the day. And then I did put in a 215 put for 66 cents. That doesn't look as good now with the market falling after hours down to 216, but still a dollar out of the money for 66 cents credit. Pretty much puts me in line with that 214 level that we talked about. Overall, good trading day for me, but still expecting bearishness to come. Let me know down in the comment section what you thought of markets today. Did you expect the market to go lower on a strong jobs report? Or what were you looking for based on the numbers we saw this morning? Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.